Hello everyone, this is M Square, the mortgage megaphone. Welcome back to the channel. Happy Victoria Day, and for those of you here in Canada, hopefully you had a nice long weekend. Well, the bond market was fairly subdued last week and likely taking a cue off of the upcoming long weekend here in Canada. And we saw the 5-year Government of Canada bond trade just below 2.8%, not far from its all-time high of around 2.9% at the beginning of the year. The US 10-year Treasury was trading around 4.5%, and all of this with some US and Canadian economic data that actually was quite subdued, and inflation data out of the US that showed that it was actually trending lower. However, all of this came at the back on Friday of a downgrade by Moodys rating agency of US debt, and it did little to disrupt the bond market. All of that calmness can't be translated to the real economy here in Canada, where in the GTA we saw condo sales drop 30% year over year in the month of April, and the Toronto Real Estate Board indicated in that same period we saw listings move up by more than 50% year over year. All of this continues to indicate to me that the real estate market here in Canada is quite fragile and the cost of capital continues to gradually move higher. So until next time, subscribe. Have a good night.